Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I want to talk to you today about why I think 30 is a great age to get involved in Forex trading. It's amazing to me that so many of the folks that are in the 28 to 30-year age bracket, somewhere in there, seem to be very unsure of the Forex market and their ability to participate in it. It's more of an inquiry type of communication, as opposed to someone who's like 24 or something years of age, and they're like, how do I do this? I gotta get going. I believe in it and I want to go. I think the problem is that as you get a little bit older and you're making a real salary, you got a real job, you're 28 years old and you've been involved in your particular line of work for several years, and you recognize the importance of hard work and gaining continuous knowledge in whatever job it is that you do, so that you get advancement in that job for your own personal satisfaction and you make more money. However, with the personal satisfaction and the making more money comes a sense of complacency or fear. They're basically about the same at that age group, because you get into a profession or a job where the money is coming pretty good. You can see the advancement of that money and you don't want to screw it up. You don't want to piss your boss off. You become afraid of losing your job because of the hit that it would take to your income, and you're unsure as to whether you could get another job in that particular field or whether you could transition into another line of work. But you know that you can transition to another line of work. The problem is, well, the income potential goes back to zero. You got to restart. I remember when I was in my 30s, I had my own business, karate school, and I was buying some real estate and stuff. And I wanted to, I'm an educator. Being in martial arts, I educate folks. And now in currency trading, I do that too. But I can remember back then saying, maybe what I should do is go into secondary, high school or secondary school, and teach. I've got all this experience, and I've got a degree in physics and minor in math and business experience, and I could go in and influence younger folks. And the starting wage was half of what I was making at that time, and they were expecting you to work for, 6 months for free to do your practicum or whatever. And I go, I love teaching. I'm just going to teach karate, which I've done, and I've been involved in martial arts now for 57 years. But there was that, whoops, I'm going to continue to do what I'm doing because I'm not going to take a half a salary cut to do something else. So when you're at that 28 to 30 years of age period, or 33 or something like that, you're in an income stream which is consistent and you feel good about that. You know that that's going to increase by, maybe you get a 2.5% to 3% raise a year or whatever. And you become complacent within that. But behind that complacency, unfortunately, is fear of loss. What amazes me is that, well, I guess it doesn't amaze me, because if you look in video land out there, you see all these crazy guys trading at 500 to 1, and they're making, $5,000 a day. Some are making $20,000 and whatever, and they're driving around in their Lambos. And for somebody who's serious, as a person in the normal workforce at 28 or 30, you become very skeptical of that kind of shit. And you've been around the block before, and you know how hard it is to make money. And so some guy that got lucky it took him 8 years to get lucky, and he's lost thousands and thousands of dollars. He may not know how he got there, but he's telling you he can teach you how to do that. But he's not an educator. He got lucky, he amassed some money, and he learned the craft the hard way. It's like swimming, and you jump in the pool, you don't know how to swim, and you almost drowned, and you keep almost drowning, and maybe you drown somebody that's trying to help you, and eventually you learn how to swim. But that doesn't necessarily mean you know how to teach somebody else how to swim. You could teach somebody else how not to drown, but not how to swim. And that's the educational flaw that I think a lot of you out there in that 28, 33-year age group are seeing. And you're saying, I don't want to get involved in that craziness. I can't take that chance. I'm making good money now. I've got a mortgage, I got a kid, I got whatever, and I can't take a chance on taking $30,000 out of my savings, because I haven't had that much time to save, but I may have $100,000 saved or whatever, and I'm making $60,000, $80,000 a year in my job. But am I willing at that point to take $30,000 or even $10,000 out and do a winger in the currency market? Because these fools are out there talking about Fibonacci's and Bollinger Bands and driving Lambos with their ball caps on backwards and their T-shirts. I could see your hesitancy. Well, let's look at the other side of it. If you could find a way to look at the currency market as a real estate market, you wouldn't hesitate to invest $30,000, $100,000, $200,000 into a real estate project because you have the information about real estate. You've been with real estate. You know, basically, we have confidence in that market. I spent 40 years as a real estate investor, and I lost $1 million twice during economic real estate market collapses. But it took me, I made the $1 million back each time, but it took me 10 years. But so you look at that and you say, well, I understand that. I understand that process and equity and all that other kind of stuff. And you're willing to put your money at that. But you could still lose all your money. It's just that you understand the market. And so you have confidence that in the long run, you'll be okay. You have confidence that if you put all your money into the S&P or a no-load index fund or something, that over the next 20 or 30 years, you're going to come out okay. You're going to come out at 8% compounded a year, and you're going to be okay. So when you're looking at the currency market, none of that okay is there in appearance. I would suggest that you look at the more serious people that are presenting Forex market education and help, and look at what they're saying and what they're doing. Is there risk involved? Yes. Could you lose all your money? Sure. When you don't follow your rules, well, if you don't have any rules, you're going to lose all your money. There's no doubt about that. But if you do have rules, and they're good rules, you should be able to mitigate those losses. But if you, on the crazy time that you decide not to follow those rules, you could lose a lot of your account. 10%. Gone like that, 20% gone like that. I know that because I've done that. You trade along and you make 4 or 5 winners in a row, and you're on a roll, and you think, I'm just going to grab, I'm going to increase my pip requirement from 8 pips or 12 pips or whatever it is that you're gaining on average on your winners. And I'm going to go for a 40 pip run because I think. And that's the kiss of death. As soon as in your little brain you say, I think, you got to figure that something's wrong. But because you're wrapped up in greed, you don't recognize that. So you put the trade on and it goes 40 pips against you. And you go, oh, well, I'm looking for a 40 pip thing. And so it'll come back, and it doesn't come back. And you're 80 pips down, and you're 100 pips down. And you're trading, $30 a pip, and you're $3,000 out. So $4,000 out. And that's a big chunk. That's 10% of that bank right there in one trade. And then you compound that by revenge trading, trying to make that money back. And it's very hard to get back on the road. most folks won't tell you that, but it's very hard. Once you break your rules, it's very hard to come back and get onto the straight and narrow, because the straight and the narrow is a conservative risk managed process, just like in real estate, except you're forced into holding. You can't just go, oh shit, I got 4 tenants that aren't paying the rent, and I got this going on, and I got a new boiler coming in. I got to just sell the property, and then I'll use that money and I'll go into another one. I'll take a loss on this one, but I can roll into something else and it'll be better, because you can't sell it. You might be trying to sell it the wrong time. You might be 200 days out before you could sell that thing, if the market is even there at 200-day market value for your particular property. And if you have 4 tenants that aren't paying you, that's reflected in your P&L and income statements from the property. Who the fuck is going to buy the property? The bottom fisher will buy it, so you're going to lose even more money. It's very hard not to stay on the real estate path because you're forced, because you can't get out. In currencies, you can get in and get out, and you can make all these stupid decisions way many more times than you would be able to in real estate. In real estate, you go, oh, instead of getting out, I'll get better leases. I'll get rid of the bad tenants. I'll do this. I can do that. I've been through all that. I've done that for 40 years in real estate. And I've bought properties that have had people that couldn't manage those properties and couldn't do it. And I walked into hugely negative situations, and in 2 or 3 months, turn the thing around just by waving my hands around and doing the right thing. But in currencies, because you can get in and out right away, you can continue to make the same bad choices because you're involved in this spiral of stuff that you're doing. That's the bad view of it. And there's nothing that I can do in a course that will change an attitude like that. But if you're 28 to 30 years old, you realize what path is necessary for you to take in order to continue to be a success at the job you're a success at, or to hold on to that job and to become a valued member of the team so that you don't get laid off, right? And so by taking a different look at the Forex market, and if you go to my website, longwoodcurrencytrading.com, and to the currency trading page, I list 7 reasons on that page as to why I feel that the Forex market is the best market for retail traders to become involved in. Instead of 8% a year on your index fund or mutual fund or something, compounded 8%, I've had 8, 12, I've had 20% months against risk. And when I do something stupid, I can lose 4 months of profits in a heartbeat. But in the long run, as long as you don't violate your rules, or you have backstops to those rules when you are acting stupid, then you're going to be okay. Because once you hit that backstop, boom, you're going to go, holy crap, that was a bad hit. It wasn't a planet killer, but it was a bad hit. I won't do that again, but you will. And then it'll happen 2 or 3 times and you'll go, phew, I keep doing the same thing. You'll recognize that. You'll recognize what the problem is, and you'll not do that. So trading doesn't go without its risks, but you can't look at these guys that are making 300% on their money in 2 months because they're trading at 500 to 1, and they've got a lot of money in the background behind them, sometimes millions of dollars, and they're trading a $200,000, $300,000 account. And if you're levered up 500 to 1, you're trading at $1,000 a pip, $2,000 a pip. So is it any wonder that you can make $10,000 or $20,000 a day? But when they make a mistake, they lose $300,000 or $400,000. So they can't make that mistake, but they've been beat up so much along the road that they know not to do that. So they tend to be successful and continue to be successful, but they can't teach you how not to get beat up along the way. They could teach you how to get beat up and if you lose all your money, you'll drop out. You'll have a bad taste in your mouth for currency trading. If you're watching this video to this point, you're intelligent. So at 28 to 30 years of age, you've got all the advantages. You've got a job that's paying you good income. You've got a stable home life environment to keep you on the straight and narrow. And you've got enough savings that if you knew what to do in real estate, you'd invest in real estate. If you knew what to do to buy the next Amgen stock or GE stock, you'd buy that stock. So if you could be made to understand the principles of risk management in Forex trading, you could be the judge to say, yeah, that makes sense, or no, that doesn't make sense. Or, yeah, that makes sense, but I don't want to do it. But unless you have that information, you're never going to be able to judge that. So the fact that if you're in a valid profession that makes you think and requires your skills to remain employed, if you study the backbone of the currency market and you say, okay, I get it. It's a viable market for a retail trader to be involved in. There are risk management rules that I can implement such that it's not that I'm not going to lose. I am going to lose, but I need to mitigate my losses to the minimal amount and use the statistical probabilities that are there that I could be a 60-40 trader. And when I win more than I lose when I lose, and I'm not losing as many times as I win. So you have the perfect recipe there, supported by rules that will allow you to do that in real time. You've got that, you're young enough where you've got 20 years to build that bank. So you could start with a $10,000 account until you gain total confidence in yourself. And then you can up it to $30,000 or $100,000 and go for it. When I work with a student, I don't care how much trading experience you have. You do have to have trading experience in order to work with me. I'll work with a beginner, but it's a custom program. But the folks that come to me, 6 months to a year of live account trading with at least $1,000 and reasonable leverage, somewhat reasonable leverage, so that you can see what the market is all about. You just can't figure out how to take advantage of it and make the kind of money that you have been told you should be able to make. Well, first of all, you've probably been told that you can make unrealistic amounts of money from it, 4 times your money a year, 400% a year. I mean, it's just craziness. Can you do that? Well, maybe you can, but not right now. You can learn the skills to do that, and you can learn all the skills in the world that you want, but you're not going to go to the Olympics right away. Right, you can learn how to swim and piddle around in your local town swimming league, but that doesn't mean you're going to swim in the Olympics and be successful. You have to take the skills that you have as the town champ and use those to build up the endurance and the timing that it's necessary to compete at an Olympic level or even at state level. And trading is the same thing. My fast track program is 6 weeks. And in that period of time, I'm not trying to get you to the point where you can replace your job income. I'm trying to get you to the point where you have the skills and the map that shows you, not only from a mathematical standpoint, but also from a practical experience standpoint that I'll have you working on, that you could make X amount of dollars if you had X size bank and you trade at reasonable leverage. Those are the main parameters of risk management that you're looking at that everybody out there ignores. I'm focusing on that right from the start. So no matter what amount of experience you have in trading or view of trading, we start out with $1,000 bank. You trade that in demo for about a week, so I'm sure that I get a sense for what you really can do from an execution of trade standpoint. Do you know how to do do you know how to think in terms of order, cancel order? Do you know how to close all? Do you really understand the platform and the process of trading before you go live? Most of the folks go live in 4 days. You read to a certain, I have you read the whole course document a couple of times before we're going to go into the live situations. About a week that you'll be trading a live $1,000 account at 10-to-1 leverage. So every pip is worth $1, and that's 0.1%. And that's how you calculate your metrics from that. As we go through the course, we get to a certain point in the course, we stop, we discuss that, and then we back up and start over again and go forward back to that point, and then we move forward from there. We stop and come back. It's called an iterative process. I was a software engineer for 33 years. That's how you solve computer application problems that you're working on, is you iterate. You do some work, then you come back to the start and you go back through it and work out all the bugs and make sure that your base is solid at that point. Then you take that next step. And that next step is a quantified block of code that you're assigned to write based on the software development lifecycle that we have. And in the currency market, I have what's called the life cycle of a currency position: entry analysis, position management, and exit methodology. Those are the 3 phases of the life cycle of a currency position. Each phase I'll show you how to write a rule for each phase, and the rule is composed of 2 to 4 conditions, and those conditions are in sequential order so that you're not involved in a matrix of decision-making process. We don't use indicators, no fundamental analysis, no technical analysis. It's order flow, price action based on the skill that you have as trading and your mastery of risk management. And that's why at the end of the 6 weeks, if you had $100,000 or $300,000 after you trade that $1,000 account, you go to $10,000 if you pass your requirements exams. I'll okay you to do a $10,000 account, and then you trade that, and I'll remain in contact with you while you trade that $10,000 account and make sure you're solid. Now, if you want to take advanced solutions course from then, you don't have to, but that's open to you, but you can't do that until you pass the metrics exam for the $10,000 account. Once you can trade a $10,000 account, you can trade a $100,000 account, a $500,000 account. There are some skills involved that are advanced skills that you may want to learn, but at that point you'll realize that you're going from college education into grad school. And so if you want to do the next step, you need some grad school type education. I mean, I'm not telling you anything new. It's the same thing as you've done to get competent in the job that you're in. And so in working with someone, it's risk management understanding. So if you're trying to do risk management in real time, you're doomed to failure. So we do the risk management up front. The rules are written to follow that risk management. There's nothing to figure out. The rules aren't static. They're conditional based rules. You can put different inputs in, but the rule remains the same. You never have to change the rules. I wrote my rules in 2018 or 19, something like that, after I had spent 7 years studying it. Well, let's see, 2007 to 18, yeah, 7 to 18, yeah, it'd be about 9 years actually, from 2007 when I started doing currencies as an academic exercise to the time when I really opened my first large account, $45,000 account, lost $40,000 in 4 months. I had done demo trading, simulation analysis. I watched all these videos. I'd taken courses and all that stuff. Didn't do any good. I had to step back from it, use my software engineering background to develop that life cycle of a currency position, and then took the remaining $5,000 I had, and I just about doubled that in about 4.5 months. So I said, oh, okay, these rules work. So I haven't changed those rules. This is the June of 2025. I use the same rules with the same conditions. Can you get better at their application? Sure you can. Because if you put shitty input into the rule, it's gonna puke back a shitty result and get you to do stupid shit. I mean, you have to be responsible for protecting yourself, and hopefully the course is what enables you to do that. And the course work also shows you how to build into your conditions and your rules to protect yourself against yourself from doing stupid shit. You can still make the decision. I can teach you how to drive a car and seat belts and everything. And you can still be driving down the highway and make the dumb decision to whip the wheel and go off the road and crash into the guardrail and roll your car over. Only you can make decisions like that. But that has nothing to do with the rules of the market of driving or anything else. But that 28 to 33 years of age, if you get into this currency trading and you learn it the right way so that you're consistently profitable over a long enough period of time to say, oh, I understand this trading thing, I can do this. You've got 20 or 30 years that you can take. You could even take a small account, like a $20,000 account, and you could compound that thing to millions in 20 years. So if you're in that 28, 30 years, 33-year-old age group, you're in the perfect stand. You have the responsibility and the respect of money, and you're intelligent enough to be able to understand the importance of risk management. If that's of interest to you, send me an email. Let's chat about this. You don't have to take a course from me, and I'm not going to try to sell you one. But you should look at the currency market as a viable alternative for you to get involved in. My advice is take a serious look at this. If you're under 30 years of age and you're wild and excited about this stuff, you have even more opportunity if you have the maturity to understand the importance of risk management. If you don't, I'm not going to take you on as a student because I can tell right away. But if you're in your 20s, send me an email. I'll tell you whether you've got the temperament to do this at this particular time. And if you don't, I can give you some ideas as to what you can do until you can come back and talk to me and say, okay, I get it. I get what you're saying. I'm ready to do this now. I've done the exercises that you told me to do, and this is what my results have been. If you're in your 50s or 60s, I didn't start looking at the currency market until I was in my 60s. If you're in your 50s and 60s and you're worried about age discrimination, or you're retiring, or you're physically beat from your job and you just can't do that anymore, but you need to have an income coming in, you're even more serious than the 30-year-old. But you can lose any money. If you're 50 years old and you're looking to have a secure way of managing your money, why would you give it to a stockbroker that puts it into stocks and the stock market takes a 30% dump about every 4 years? Why would you do that? Why wouldn't you put it into a no-load index fund? Well, you might, but you don't have any control over that. Well, what are you going to do? You're going to trade? You can't trade stocks unless you have $25,000 at least, because you're called a pattern day trader if you're going to be trading stocks more than 4 times a week or something like that. The currency market has no requirement like that. You just have to be able to breathe enough to fog up a mirror and have some money to get involved in it. And if you learn risk management, well, an extra $2,000 a year would help you out a lot, wouldn't it? You don't need a very large account in order to make a couple of $1,000 a year. So maybe that's of interest to you, and you should look at that as well. The currency market offers a lot of benefit for those that are really willing to look at it realistically. I hope that you are doing that, and I look forward to getting an email from you so that we can chat and maybe just become friends and have a chat relationship over the years. You don't have to take a course from me. Send me an email and say, I'm stuck in my trading. How do I fix this? And if it's a simple thing, I can be willing to help you out with that, no charge. But the main point of the video, 20-some, 30 minutes later, is that if you're in that prime age group of 28 to 30, let's do this. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.